Ladies and gentlemen, good day and welcome to the Dreamfolks Services Ltd Q3 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference, please signal an operator by pressing star and then 0 on your touchtone phone. Please note that this conference is being recorded. Today on this call, we have with us Ms. Libreta Kalat, Chairperson and Managing Director, Ms. Jia Diwan, Chief Financial Officer, Mr. Balaji Srinivasan, Executive Director and Chief Technology Officer, and Mr. Sandeep Sonawane, Chief Business Officer. I now hand the conference over to Ms. Libreta Kalat. Thank you, and over to you, ma'am.
A very good evening to everyone, and thank you very much for joining us on this earnings conference call for Dreamfolks Services Ltd for the third quarter and 9 months of the fiscal year 2024. We announced the financial results earlier today, and I hope you had a chance to go through our financial results, investor presentation, and press release that are available on the stock exchanges and our website. Let me now begin by briefly touch upon the industries that we operate in and how the landscape is expected to evolve over the next few years, augmenting our growth. The Indian travel industry is one of the largest and fastest growing industries in the country. In the third quarter, the air passenger traffic in India grew by 9% year-on-year to 39 million passengers, as per DGCA data. For 9 months period of the fiscal, the domestic air passenger traffic saw a growth of 16% year-on-year. The government has also intensified its efforts towards infrastructural development, and the key airports across the country are undergoing significant transformation projects to enhance the travel experience of passengers. The lounge industry also stands to benefit significantly from this growth in the travel industry, and we are poised to capitalize on macro-level surge in demand and look to get deeper ingrained with our key clients across the economy. Moving on to the credit card industry. India's credit card penetration is as low as 5.5%. The data show that credit card users in India has grown significantly over the past 2 years from over 7.5 crore credit cards in April 2022 to 8.6 crores in April 2023, recording a 15% growth. This number is poised to hit 10 crores by April 2024. An important factor that will drive India's credit card penetration and usage in the future is the gradual integration of cards with the paramount unified payment interface. UPI's dominance of India's payments landscape is such that if cards gain a strong foothold on it, they are almost guaranteed to penetrate much more deeply into the Indian market. Hence, with the evolving models and changes in the credit card industry, an interesting timelines ahead for the industry. Dreamfolks is currently positioned and stands as India's leading aggregator of airport and lifestyle services, pioneering the introduction of airport lounges access in India. We currently hold a market share of around 90% in card-based domestic lounge access and provide complete lounge coverage across all Indian airports. Our proprietary technology platform empowers clients to tailor service offerings for their end customers. With a global presence spanning more than 1,500 touchpoints across 100+ countries, we have evolved beyond airport lounge access to offer additional value-added services such as railway lounges, meet and assist, golf games and lessons, airport transfers, visa services at your doorstep, spa services, airport dining, transit hotels, nap rooms access, and eSIM. We also have recently launched beauty and floral gifting services. For the third quarter of the fiscal 2024, I am pleased to announce that we have crossed the INR 300 crores mark in revenue from operations in Q3, recording INR 305 crores, witnessing a growth of 50% on year-on-year basis and 8% on sequential quarter-on-quarter basis. Our gross margin continued to remain at similar levels sequentially at 12.54% in Q3 financial year 24. Last quarter, we addressed the ongoing structural changes that are happening in the credit card industry. You would have observed that many banks are in the process of changing the program structure or the benefits on the card programs by moving to a spend-based structure instead of fixed benefits. We are working very closely with the banks for the redesign as well as usage of proprietary tech platform for implementation. Although we have observed initial pressure on volumes resulting from this transformation, we remain optimistic about medium to long-term sustainability of the spend-based benefit mechanism. We are also focusing on adding more enterprise clients to our client base, which will provide us further growth opportunities. This optimization in benefits for non-premium cards should have short-term impact on these card sales. We believe the self-correction of the numbers might take some time to manifest from customer awareness to applying and sanctioning the new cards. As part of our innovative product strategy, during the third quarter, we launched our exclusive membership initiative, the Dreamfolks Club. This offers a range of membership packages where our world-class services are bundled together and aim to provide luxury and comfort for all budget ranges. For someone seeking enhanced comfort and convenience, to those earning for a truly luxurious travel experience, Dreamfolks Club ensures inclusivity. Dreamfolks cards provide us a value proposition for a corporate client base where we can negotiate with them and sell our services in bulk. The initiative reflects our commitment to our foundational principles and serves as a potent tool for business to elevate relationships with key stakeholders, thereby enhancing retention and loyalty. In our ongoing commitment to enhancing the area of services, we are pleased to announce 2 additions in the quarter. We now offer our customers the convenience of availing health checkups across India, further prioritizing their health and well-being. Secondly, we have introduced a new service category of allowing customers to send flowers, cakes, planters, and more to their friends and family. All these new services will add up to our non-lounge business and will help us to achieve our target to make it double-digit revenue contributor in future. We continue to expand our geographical footprint through our strategic partnerships. These partnerships continue to enhance our brand awareness across newer countries and continents across the globe. During the third quarter, in terms of global expansion, we spread our wings globally by signing an agreement with Grey Wall, one of Russia's leading lounge operators. Sandeep will be talking more on this. We also have expanded our presence in railway lounges by partnering with new railway lounges in Chennai and Old Delhi. We continue to maintain 100% coverage in railway lounges access across India as well. As an outcome of all the strategies and efforts, the company and leadership have received several awards during the quarter. Economic Times the Best Brands 2023 and India's Impactful CEO 2023 awards. We were also awarded World's Best Emerging Brand and World's Best Emerging Leader by WCRC Group. In addition to that, we have also received the Top 20 India Tech Leaders at the 4th Annual Digital Transformation Summit 2023 and the Entrepreneur of the Year 2023 at the India Achievers Forum. Our primary objective right now is to diversify our client base and expand our service offerings while maintaining a consistent performance. With an adept technology and a resilient team, we are well positioned to deliver strong performance in the times ahead. With that, I would invite Sandeep to give an update on the business front.
Thank you, Liberta. This has been an eventful quarter from the business point of view. Beginning with the Dreamfolks Club, it presents a range of 4 card options: Aspire, Premium, Select, and Elite. These meticulously crafted packages encompassing travel and lifestyle experiences serve as a seamless means for organizations to drive and engage their employees, customers, and channel partners. Consequently, these initiatives would contribute to increased customer retention and loyalty, concurrently enhancing the perceived premium status of your brand and facilitating companies in fostering strong brand preferences. We are excited about enabling businesses to associate their brands with unforgettable travel and lifestyle encounters. In line with our strategic vision of expanding our client base, we are delighted to announce the addition of an e-commerce company to our roster of clients. This collaboration allows our new client to benefit from our diverse range of lounge and non-lounge services. Additionally, we are also proud to welcome new age fintech company like FiMoney into our clientele. We are excited about the synergy these partnerships will bring and anticipate further growth and success in our endeavors. We have established partnership with Greywall, a prominent airport and lounge service provider in Russia, as Nikita mentioned. Leveraging our proprietary technology platform, we will facilitate seamless access to approximately 100 lounges strategically situated in the key airports and, of course, railway stations throughout Russia. These strategic moves not only enhances our global brand recognition, but also extends the accessibility of lounge services worldwide for our existing clientele in India as well. These endeavors serve as an evidence of our unwavering commitment to our customer-centric approach across all our initiatives. Our ongoing effort involves the strategic expansion of existing services coupled with exploration of innovative services to augment our service portfolio. We remain vigilant for all the opportunities to broaden our horizons as exemplified by a strategic collaboration with the prominent organization. Furthermore, our focus includes diversification in the client mix as we actively incorporate enterprise setup into our clientele. The overarching objective is to extend our reach into new sectors, fostering customer engagement and offering loyalty management solutions. This strategic approach is designed to mitigate risk and, of course, diminishing dependency on the singular client type. In conclusion, our ongoing evolution is geared towards securing our preparedness for the future. We stand committed to providing our clients with personalized solutions, be it through advisory services or the development of tailor-made solutions and product offerings which are meticulously aligned with their specific requirement of the client. For an update on the technology front, now I invite Balaji to take it forward.
Thank you, Sandeep. The recent introduction of the Dreamfolks Club membership program on our tech platform marks a pivotal moment for us. Leveraging the capabilities of our innovative platform, we have seamlessly integrated new offerings like eSIM, health checkups, total services, and grooming services to enhance the benefits available to our valued beneficiaries. This initiative not only signifies a push for innovation, but also reflects our ongoing efforts to create a comprehensive value proposition for our clients and consumers. Our proprietary platform has been developed in-house and empowers us with the ability to create bespoke products and solutions for our clients. Aligned with a commitment to maintain an asset-light and lean org structure, our platform and tech are cloud-based with the objective of offering our clients and their end customers clear visibility into the benefits and services, facilitating access to these services through various access mechanisms and services. This is achieved through an omnichannel approach, enabling access to lounges and other benefits via cards, card issuer apps, the Dreamfolks app, self-check-in kiosks, a web-based portal, all of this facilitated by our hybrid technology. Utilizing our platform, our clients can effectively monitor and optimize the spends on the product P&L and implement targeted benefits for the profitable customers. As Siddhartha mentioned, we are seeking an uptake where our customers have been implementing these solutions. I would like to point out a couple of examples where these solutions are getting implemented. A large bank has implemented this for one of the premium credit card products, among others. Using our tiers technology, they have defined a few tiers of benefits, and each tier has different number of benefits. For example, one tier might have 8 lounges per quarter, while the upper tier might have 12 per quarter. And more interestingly, getting access to more premium services as well in the higher tiers, such as airport transfer and meet and assist. So depending on the annual spend, the additional tier or the next tier would get unlocked and the associated benefits as well. Another example would be where another large bank has implemented this for the debit card portfolio and users. Here, the tier incentives are evaluated every quarter and benefits such as lounges are assigned based on the spend cohorts. Further, I am delighted to share that our platform is now compliant with the payment card industry data security standard, which is PCI DSS version 4, signifying a substantial upgrade from the previous PCI DSS version 3.2, and thus a significant milestone for us. These enhanced standards not only align with the latest industry best practices, but also reinforces our dedication towards data security and thus instilling trust and confidence among the stakeholders. To conclude, our tech stands as one of the most prominent assets, underscoring our perseverance to continuously upgrade the platform. This commitment is rooted in the pursuit of giving appropriate and timely solutions to our clients and continue to disrupt the industry. With that, I hand over the call to Jia to take over and walk us through the financial performance.
Thank you, Balaji, and a very warm welcome to everyone on this call. Before we deep dive into the financial performance of third quarter, I'm glad to highlight that the company has posted another set of growth results in the quarter gone by, summing up a strong performance in the 9 months of fiscal 2024, building on its performance from a record year. The solid foundation laid in terms of the network, cutting-edge and agile technology, and deeply entrenched client relationships positions us well to drive sustainable growth, which is in line with the guidance in this ever-evolving industry. For the third quarter of 2024, the company reported a revenue from operations of 305 crores with a year-over-year growth of 49.5%. Gross profit grew by 14.7% to rupees 38.3 crores in the quarter as compared to rupees 33.4 crores in the corresponding quarter of last fiscal. Gross margin stood at 12.54 for this quarter, a slight uptick from quarter 2 FY24 levels of 12.61. EBITDA margin for the quarter was 9.2% as against 8.8% in the previous quarter. EBITDA was at rupees 28 crores versus rupees 24.8 crores in the previous quarter. PAT for the quarter was also at 20 crores as against rupees 18 crores in quarter 2 FY24. EPS for the quarter stood at 3.8 rupees per share. Despite recent macro uncertainty, we see growth holding steady in the travel industry. However, given the recent changes in the card industry in terms of optimizing the benefit management offerings by the banks, we maintain a cautiously optimistic approach, keeping an eye on development across the industry. In 9 months FY24, our revenue exhibited substantial growth, surging by 59.5% YOY from rupees 535.5 crores to rupees 853.9 crores. Gross profit experienced a 19.1% YOY increase, reaching to 101.7 crores in 9 months FY24 compared to 85.4 crores in the corresponding period of the previous year. EBITDA for 9 months FY24 was 71.6 crores, marginally up from 67.1 crores in 9 months FY23, primarily due to the compression in the gross margin. PAT for 9 months FY24 was 50.7 crores compared to 47.2 crores in the corresponding period of the previous year. EPS for 9 months FY24 was at 9.6 per share compared to 9 months FY23 at 9 per share. As an asset-light company with a streamlined team and structure, we currently do not anticipate significant capital expenditure requirements. We are assured in our ability to fund potential acquisitions and expansions using internal accruals. Our strong profitability and our ability to manage our operations efficiently has enabled us to maintain a strong return ratios as ROE stood at 23% and ROCE at 30% on YTD basis. We are pleased with our performance in quarter 3 FY24 in an evolving business environment. In terms of guidance for the fiscal 24, given the YTD performance, we would like to reiterate the revenue guidance to more than 40% year-on-year growth. Concurrently, given the improved margin performance in the last 2 quarters vis-a-vis quarter 1, we estimate gross margin for the year to be in range of 11.13%. With that, I would like to conclude my update, and we are happy to open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes... Sorry, go ahead.
Okay, just a correction. I think when I said 11 to 13, probably I said 11.13. So the range between 11 to 13% is what I meant.
Thank you very much, ma'am. We will now proceed with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to withdraw yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shreyans Mehta from Equirus. Please go ahead.
Yeah, congrats on a healthy performance. A couple of questions from my side. Ma'am, first on the air traffic growth, how do you see it playing out, say for next year and within, next 2 to 3 years, given that the air traffic is almost, above the pre-COVID levels?
I think Librita did mention about it. I think the air traffic we are envisaging going to be in the range of 15 to 16% CAGR for the next 4 to 5 years.
Okay, sure. Secondly, in terms of, in terms of gross margin, despite we being on a cautious side and, despite the industry going through the turbulent times, the margins seem to be, at the higher end of what we have guided for. So fair to assume, that disruptions are over, or probably, it will have some lag effect and probably we could see some disruptions in margins in next 1 or 2 quarters?
So I would say that, this would be, and as we mentioned even in the last quarter earnings call as well, that yes, I think we would try and maintain our margins at this level only for the next few months, which would be between 11 to 13%.
Got it. So ma'am, I'll put it other way around. So you think, that the disruptions are largely over because majority of the banks have already, switched to the spend base, and given that we've been, the conversions are intact, margins are intact. So is it that fair to assume that there's no lag effect, or probably, we might see some lag effect coming in?
I think it is still the early days, so the program has gone live, and at this stage, I don't know if there is enough data for us to, extrapolate for a longer period. So I think it's still early days for us to comment on this.
Got it. Last question from my side on the membership program which we've introduced. Just wanted to understand, the growth prospects out there, the scalability, and what's the strategy out there?
Okay, so fundamentally the idea for launching this membership programs are manifold. One is fundamentally to increase the discoverability of the services. We mentioned in the call also that there are quite a lot of services that we are adding, and not every client is ready at this moment to really absorb that. So it is very important for us to ensure that the consumer know that what are the kind of services that we are adding. Point number 1. Point number 2, I think the membership offers contemporary services as a package to the consumer. All these services may not be offered in totality by any of the clients. So this allows us an opportunity to actually bundle it and offer it as a membership for the consumer. Third one would be to, of course, tap all those consumer cohorts which currently do not use any card. I mean, whether it is debit card or credit card. So the fundamental idea was to actually achieve all these 3 objectives. And honestly speaking, we do not have any number in our mind as to, this is the kind of sale that we are expecting out of this membership. The whole idea is to drive these 3 points as opposed to really making the consumer, buy these kind of, membership plans.
Got it. So So, just to put it other way around, so I mean, in terms of scalability, probably this would be more of a value-add service or, for those people who don't have cards, primarily for them. Is that the right way to look at it?
I think I gave you 3 reasons. One of the reasons, yes, you're right. Quite a lot of consumers are there who do not carry or not comfortable with carrying a credit card or debit card. Especially senior citizens, I think, I think, and few people as well.
Got it. I have a couple of more questions. I will join back in the queue. Thank you.
Thank you. The next question is from the line of Mukul Garg from Motilal Oswal Financial Services. Please go ahead.
Thank you. Good evening, Debrata. Good quarter on the top line side. I just had one question from my end. You mentioned about the potential impact on volumes in the near term. Any sense you can share with us, qualitatively on how and when this will play out? Have you already seen a portion of your credit card base migrate to the to the newer way of kind of looking at the business? And is that something which should kind of start becoming visible in this quarter, or is that something which you anticipate would play out over next few quarters? And I know it's difficult to quantify, but any sense you can give on the potential reset?
So Mukul, I would say that we have already started seeing that change. Okay, and if I would say that it's not that across all the clients or all the issuers have started implementing, but the top one have already implemented this, and there is an impact which has been seen in Q3 as well. And as and when the other issuers would start implementing the spend-based model, this will further start adding to it. But I would say that it is not going to be across all the cards, or it's going to be across all the banks who would be taking this decision. So what we have seen is that yes, there is an impact, but however, we have also seen that there is an increase or incremental in other small issuers as well, because that's what the trend is going on. Right? So if there is a downfall in one of the card base, there is an increase in the other segments. So that is already been seen in past, in the last quarter. And I would say that this will happen in next few months as well. However, in terms of the growth, I would say that, it's not that the growth will be completely impacted, because if you actually see that we have grown by 50% in Q3, okay? Maybe the impact was, I would say, few points for us. However, in overall thing, I would say that it would not be that huge impact, because as I told, that if there is a downfall in one of the segments, there are segments which are picking up, and that is the trend which will be going on in next couple of months as well.
Perfect. No, I think that's super helpful. Thanks for answering this. I will get back into the queue. Thank you.
Thank you.
Thank you. We have the next question from the line of Imran from Longbow India Capital. Please go ahead.
Hi. Thanks for the opportunity. Just a very simple question. I don't know whether you guys track it or not. I wanted to understand, if you have tracked this number, right? Unique, domestic lounge, basically visitors per quarter or per year, if you have that.
Unique number?
Yeah, unique users is there. Typically, it would be in the range of about 4 to 5%.
4 to 5%, right? And since only 4 to 5% of the people are using this benefit, I'm sure there are a lot of people having cards who are not coming to lounges. But despite that, I have at least in my experience, not seen any advertisement or whatsoever, either in airport or somewhere else, that you guys tell people, "Hey, look, your debit cards or credit cards come with this facility. Have you tried it?" A basic, simple ad. I have at least not seen it. Can you throw some light on it? Why it has not been done? Whether you guys can do it, or maybe you can, ask basically lounge guys to do it, from their P&L, or maybe a 50/50 ratio, you and they do, combined. Can you throw your thoughts on it?
So if you actually see, these benefits have been usually given by the banks or by the network provider, which is Master, Visa, or Amex or RuPay, right? So the thing is that it is their product, it is their benefit, and we are not authorized to do any such advertisement on their behalf because it's their product. So, or whether it's just not Dreamfolks, but even at the lounge end, the only thing what we have tried doing is that, having signage at the lounge entrance. And now if you have actually seen that, we have also installed the self-check-in kiosks, which are little away from the lounges as well, which also, helps to talk about that, which are the cards which can have the benefits. So the consumer or the end user can actually directly go and check on their card details. But as such, we cannot do any such marketing from our side because it is completely restricted, and I think it is also a compliance thing because it is a benefit which is there on a credit or the debit card, which needs to be provided by the banks. And I think the banks are doing this at the time of issuance of the card. So this is one of the reasons that why you don't see any such communication at the airport or anywhere else.
So help me understand why, this number of 3-4% only, using the facility would increase if basically it is not communicated in a proper way. See, banks would definitely would not want people to take this because it is a loss for them, right? If they even put a simple banner on, an ATM or let's say on their website. So how would this increase? Only through word of mouth, or what do you think would be the reasons, this percentage will go up?
So I would say that, the percentage is growing because from the time when we have started this business and now if I have to say that, the percentage has grown, the awareness is growing. I mean, when we started, I would say that the conversion rate was less than 1%. Today, if you actually look at it, the conversion is around 5%. So I would say that yes, the awareness about the lounge, the awareness of the lounge benefit is growing. And not only that, there are customers who are actually going for the credit card looking at if there is a lounge benefit provided on that particular card. So I would say that that is growing, and that's the trend what we have seen in past 10 to 11 years. So I would say that, it is more word of mouth, but I would also say that, I'm sure if you have seen at the airports as well, where you have this credit card kiosk which keeps selling the credit cards, the first thing they also announce is that, you get a lounge benefit complimentary on these particular cards. So I think the advertisement is also going on well about, the card benefit. So I would say that, there's nothing much more or anything what Dreamfolks could do about it. But yes, I would say that, the things like self-check-in kiosk or the web access model, which we have actually, implemented, these are something which will actually create more and more awareness in the market.
Right. And operators, shall I ask one more question, or you think there are a lot of people I can move in the line?
You can ask one more question.
Okay. I think, I have been listening to the Concalls from the last 6-8 quarters, and you have constantly spending, I think, more than 50% of your time explaining the new things that you are doing, whether it is technology related or some other partnerships or something like that, right? Just to understand it better, what percentage of your revenues, as of now, come from the non-bank cards and through some other means?
So largely, if you see, our business is from the lounges and from the bank cards right now. So the thing is that the reason why we are trying and adding more and more services is because we also see the high demands coming up from the client side as well as the consumers. And that is one of the reasons that why we have added different services. At present, if you ask me, I would say the majority is from here, but over the period, that is, I would say next 4 to 5 years, I would say that these services would contribute around 20% to our top line.
And this would be negligible, right? 1 or 2%, maybe 3% right now?
Yes, it's negligible right now.
Oh, okay. Thank you so much. I'll fall back in the queue.
Thank you. Ladies and gentlemen, we request you to please restrict your questions to 2 questions per person. For follow-up questions, you may rejoin the queue. We have the next question from the line of Keshav Bagri from VT Capital. Please go ahead.
Hello, am I audible?
Yes.
Yeah, my question is related to the long-term revenue growth which is seen in the business. Like we've seen FY23, FY22 over to be a high growth phase for our company. And I think we closing FY24 with 1,100 crores of revenue. So ma'am, for FY25, what is...
Sorry to interrupt, but your voice is not clear. You're not able to understand. It's echoing.
Ma'am, is it clear now?
Keshav, the line is not very audible for you. We request you to please use the handset while you're speaking.
I think it's perfect now.
This is better. Please go ahead.
Yeah. My question is related to the long revenue growth which is seen in the business, because we've seen FY23, we've seen FY24. So these 2 years have been a period of very high growth for the company. For FY24, we'll be closing at around 1,100 crores of top line. And recently, I've also said that banks have shifted their model to spend-based thing now. So, what is the kind of the moderation, or what is the kind of the constant revenue growth that you're seeing in the business for FY25 and FY26 to come?
See, the driving factors for us, for the business is the airport traffic and the credit card penetration, right? And we have always mentioned that, the way the market is growing, we will be growing in lines with the market. So I would say that the way these 2 drivers are growing, we will be aligned with the same.
Ma'am, any quantitative number would have really helped us. Like, I know from qualitative point of view, that's a very nice answer, ma'am, but anything on the quantitative side would have really helped us.
I would really like to give that, but we have certain restrictions. I will not be able to quantify that.
Sure, ma'am. And ma'am, my second question would be on the margins. Like we, as a business model, we've seen like operating leverage plays a very minimal role in our portion, in our business specifically. So, what will be the top line growth for the company is something which will follow up in the bottom line as well. So the reason my question was, ma'am, do you see more moderation in margins, or do you expect margins to improve from the rock bottom levels which we have hit now, like for FY25 and FY26?
So as I mentioned that, going forward, we will try and maintain the existing margins what are going on. But yes, the other services which we are adding on, which will have a better margins, so that will actually improve our margins as well.
Thank you so much, ma'am. That's all from my side.
Thank you. The next question is from the line of Divya Sethi from Electrum PMS. Please go ahead.
Yeah. Hi, ma'am. So I just wanted to understand, in the last quarter, you mentioned that you partnered with a visa service provider and also started golf club services. So how is that faring for Dreamfolks so far?
So golf, yes, we have, already initiated, and there are clients which we have onboarded, and there are few in pipeline, and hopefully this quarter we will also be onboarding for the golf program as well. Coming to the visa doorstep is also in process, and very soon we will also start, the program for visa doorstep for few of the banks.
So ma'am, like both these services, are these high margin services, or like what is the arrangement basically?
Sorry, I couldn't hear you.
No, I just wanted to understand from margin perspective. So are these high margin contributing verticals?
Yes, as I mentioned that, all these other services, the margins are relatively better compared to the lounges, yes.
Understood. Also, just another question. I recently read your press release which...
we request you to please use the handset mode while you are speaking. It will be a little clearer.
Just a second. Yeah, is it better now?
Yes, please go ahead.
Yeah. So just wanted to understand, I mean, if you could throw some light on the arrangement for partnership that has happened with Healthians and MyFlowers for lab test and plants and flowers delivery. So is Dreamfolks going to act as an aggregator, or what is the arrangement? If you could please throw some light on that.
Yes, so it is very similar to the arrangement we have for, let's say, a lounge or a golf. So these are services that would be offered to consumers of our clients, which would be the end users, could be a bank customer or could be an enterprise, as Sandeep was mentioning. And with the same Dreamfolks channel and the technology and the services and the membership, and the consumers will be able to access. So very similar to way the today, let's say, one of our clients could be offering 2 lounges per quarter as an example. Similarly, it could be 2 pet care services or 1 health checkup per year or something. All these could be configured, and that's the mechanism which we are enabling for our customers.
Understood. So majorly we'll be acting like an aggregator for them, for Healthians and MyFlowers.
Yeah, you can say that.
Understood. Thank you. That's all from my side. Thank you so much.
Thank you. The next question is from the line of Angad Kattare from Samiksha Capital. Please go ahead.
Thank you for the opportunity. Congratulations on the good set of numbers. Most of my questions have been answered actually. One small bookkeeping question. Can you comment on the receivables and payable days for the Q3? That would be helpful.
Sure, Angad. It's in the same line of September, which we reported, in the range of 100. And it has been consistently in the same normal scenario of 100 days.
Okay. Thank you. And one small observation. If I look at the conversion rate, it has more or less stabilized in the past 2 quarters. So going forward, how do you see this trend? Will this trend to a spend-based model see this trend reversing? Or if you would just throw some light on it, that would be helpful.
See, like you mentioned, it is still early days. So we are also observing. We are seeing a couple of interesting patterns where we are seeing consumers either migrating to a different product within the same portfolio, within the same issuer. And then we're also seeing that in some cases, the traffic is moving from one issuer to a different issuer. So these are some early trends and patterns that we are observing, which are doing it very closely. But as of now, I don't know if we can, come up with a hypothesis as to how it would be in a couple of quarters. So maybe, we'll observe it for a few months and then we'll be able to, share something with you.
Sure. And one last question on the employee expense. The employee expense YOY has increased substantially. Will you see a similar trend going forward? Or
so there has been a growth YOY in that. One major factor which is driving the growth is definitely the ESOP expenses, which is 20% of the total employee expenses, which was not there earlier. And second, as we are growing up and expanding in terms of our service lines, in terms of our diversification with respect to clients, we are also spending on building up the team, which is in future going to contribute to the top line.
Sure. Thank you so much. I'll get back to you.
Thank you. The next question is from the line of Dipesh Kashyap from Invesco Mutual Fund. Please go ahead.
Yeah, hi. Thanks for taking my question. I had just one. If you can just give me the cash on the balance sheet at the end of December, and how do you plan to spend it going forward?
Okay, so this is the cash in the balance sheet in the month of December, as on 31st December, was actually 49 crores. And as we have always reiterated that, we do have a capital allocation policy well approved by the board, which actually devises a mechanism of allocating it for the future investments, for any opportunities in terms of any takeovers or acquisitions, and also as far as our business expansion is concerned outside India as well. And definitely larger focus also goes in the form of returned back in the form of dividends. So as we end the year, this discussion would be taken care by the board, and we will announce accordingly how are we going to, spend in the future years.
Got it. Just to clarify, so your international expansion is largely led by the OpEx cost, right? The marketing and employee cost. It's not any CapEx related thing, right?
It would have a mix of OpEx as well as CapEx. When we go out aggressive in those regions as well, there would be a certain amount of CapEx also involved in that.
Okay, got it. Thank you.
Thank you. The next question is from the line of Darshil Javeri from Crown Capital. Please go ahead.
Hi, good evening. A lot of my questions have been answered. So I just wanted to ask, like, in terms of our guidance that we are saying we'll grow as per air traffic and credit card penetration. So I would just like to ask, how would we be able to, analyze how does the credit card penetration maybe help us? Like, as you were saying, the conversion was 1% and now 5%. So maybe so the kicker of an additional percentage of credit card would maybe contribute how much to our revenue? Could we get some flavor on that? Hello?
Yeah, that will. So it's actually, the way we see the drivers is a mix of both, as Librata was also explaining. It's a mix of both credit card industry growth as well as the travel industry growth. Right now, definitely quantifying it and dividing the percentage of growth driven by the credit card industry vis-a-vis driven by the travel industry is mathematically also, becomes difficult, because somewhere some plays a larger role and in some periods the other plays a larger role, right? But mix of these two factors drive in our growth as well, combined with the awareness which has increased over a period of time with respect to availing the services.
Oh, okay. And like you seen that our spend base we need to analyze for a few months. So just like what kind of environment do you see for FY25? Like maybe is this the right way to look at it, that H1 we will see how the spend based model is going, but as what we can observe is maybe that air travel and credit card awareness is only increasing. So maybe H2 would be bang on what we are trying you see business or something. Like how would you maybe not exactly quantify it, but qualify how you see the year progressing?
Yeah, I think long term we believe it will stabilize, because today our hypothesis is that multiple users have got multiple cards, and they are sometimes doing spends on one card while the benefit might be availed on a different card. And at some stage here, I think when this kind of all settles down, the expected pattern of behavior is that the users are using predominantly one or two cards in which they are using on which accumulated spends are happening, and that is the card that is used on which the benefits are also there. So we are right at the beginning of this process where users will migrate, will choose, will select, and will be smart about which card they use for which transactions, and therefore they can avail the benefits of that spend base. So realistically, a user who's used to, let's say, availing a lounge service will not go without using the lounge service, because the air traffic and the air travel will still continue to happen. So our hypothesis is in the very short term or near mid-term, all this would actually stabilize to what it was at, very similar to what it used to be before. That's our hypothesis.
Okay, and that would take a year or two maybe, right? Like that, what is the case? And just wanted to ask that, just want to call clarification that margin that you were saying was gross margin, right? 11 to 13%?
Yes, it is gross margin.
Oh, okay. Yeah, thank you so much. That's all my questions. Thank you.
Thank you. We have Shreyans Mehta from Equirus with the next question. Please go ahead.
My follow-up question is for Balaji. So Balaji, just wanted to understand what proportion of the large market share credit card players will be on this platform of spend based, either with us or probably on their own platform.
I don't know if immediately a number comes to mind, but a lot of the large players have already moved to this model.
Okay. Sure. And this is for Jia ma'am. One clarification, you indicated 40% growth. So that's for FY24?
Yes, that's for the entire year.
Ma'am, because, if I just do a back of the envelope calculation, so are we expecting fourth quarter degrowth year-over-year as well as quarter-on-quarter?
So quarter-on-quarter is actually always not consistently growing, right? Because the seasonality factors also play an important role. If you see Q3 is always higher for us.
Correct. Ma'am, because, then it will be
just to add on, we spoke about the spend base and the impact which is there. And as mentioned that the impact has already been seen in Q3. So we will also see a further impact coming in Q4 because not all the issuers had actually, migrated to this model, but there is a migration which is happening in this quarter. So that would be one of the reasons that why we would see, I would not say a degrowth, but I would say less, points compared to the previous quarter.
So should I put it this way, it's on a very conservative side that we are guiding for this?
Definitely, yes.
Oh, got it. Thank you and all the best.
Thank you. The next question is from the line of Siddhant Punjabi from Way to Wealth. Please go ahead.
Hi, am I audible?
Yes, you're audible.
Okay. Is this audible now?
Siddhant, you have a background noise coming on your line.
Is this
better?
Okay. So, ma'am, just a quick clarification. You guided for a gross margin of 11 to 13%. But if I look at FY23, throughout the quarters, you were doing close to about 16 to 17% gross margin. Then, of course, the issue about the CAM came in, which is why we had to take a hit. But now that, the banks are also shifting to, a spend-based, lounge access and benefits. So going ahead, what is really stopping us from going back to the, 16 to 17% gross margin or even 14 to 15%, maybe in the coming years? I understand that Q4 you said that it's still in transition phase, but in FY25 or maybe in the latter half of FY25, what's really stopping us from going back to those numbers?
So if you actually see that the way we are actually forecasted and what we were talking about, adding different services as well as different clientele where we know that the margins will improve, right? So it was, I mean, the thing is historically, yes, we have always maintained around 14 to 15% of margin. However, it is a few points down now. But in a couple of months, I would say, or a few quarters later, we would actually get back to our, I would say, a stabilized way, as and when the other services and the client base would increase. So I would not rightly comment about which year or from when it would start doing it, but the focus is completely on adding or building up other services and adding a different client base, which is, enterprises, and we are also working closely with the airlines and the OTAs. So I would say that, as and when the business would pick up for these segments, of course, the margins will get better.
Right, but ma'am, we had these segments earlier as well, and if I'm not mistaken, in the previous questions you also said that 80% of our card-based lounge access will continue to remain, while 20% will come from the other services that you are planning to improve on. And so I believe that even that 80%, and that is also you said after 4 to 5 years, and currently we're still looking at about 98 or 97% of, our revenue coming from card-based lounge access. So even if, I take these new services in hand, considering the, the growth base and the pace that you're saying, I don't really understand why, we can't really, take things ahead, because clearly we do have the infrastructure, we do have the technology and everything in place. So what's really stopping us from doing that?
So I would say that there's nothing which is stopping us. I was just, trying to mention that the focus is not just improving on the margins, but the focus is also on adding different services and working on a different client base, right? And yes, as you are rightly mentioning, I would say as a management, we are reworking on our price structure. I think, Jia, you want to add something?
Sure. Yeah, so in terms of when we scale up as well, we'll also have to see that how in terms of new additions which we can bring in to our clientele, which help them get much more involved and much more deeper integrated as far as the services are concerned. So as we scale up, definitely, there would be some amount of services which would provide us higher margin. However, there would be some wherein we would want to, get more market share. There would be existing competitors also staying over there. So a lot of such factors play a role in making us decide about the gross margins. However, as we have always said, that the newer services we would see in next 3 to 5 years contributing a significant part to our total businesses. So that would definitely have a positive impact.
Okay.
And also we request you to please rejoin the question queue for follow-up questions. The next question is from the line of Dipesh Sancheti from Manya Finance. Please go ahead.
Yeah. Hi. Am I audible?
Yes, sir, you are audible. Please proceed.
Okay. Just wanted to know what is the price point of the cards which we are offering?
So there are 4 variants, and it ranges from 6,999 to 1,00,000, so 99,999. And so there is a very good spread of benefits between the 4 variants, and the idea really is to have a template or a starting point. So as Sandeep mentioned, so while these are 4 variants that we have launched, and somebody could just go, or you could go and purchase this today on a website. This is also to kind of bring awareness of the services. So when you go to an enterprise or any other large client of ours, they can use this as a starting point, and we are quite happy to customize it for them. So that's really the thought process of launching these cards.
So how are we going to market it? Are we going to go B2B for the larger enterprises, or are we going to go for any of the customers who want to just buy the card from the website and use the services?
So yeah, both. So we are definitely targeting, consumers. As I told you, one of the important cohort is that a lot of people do not want to really have a credit card, debit card. For those, why not access all these facilities when they are not given either credit card or debit card? So that is one for sure. Yeah, but the large picture definitely is actually go to B2B. So these all services, we want to make them discoverable so that they also, and I'm sure, the banks would also start seeing the usability of the services. While currently they may be a little slower in terms of adopting this, but as consumers, more and more consumers use them, obviously it will put little pressure also on them in terms of being in line with all these contemporary services, so that they become the part of the CVP of the client itself. Yeah, so but the large picture definitely is to drive B2B. So the idea of going to B2B to C is to drive B2B business largely.
Okay. And how is it going to be the revenue? Just wanted to know what is the revenue model in this, because right now banks are paying for all the services which we are offering, right, to their own customers. Now we are trying to acquire customers, and selling them the same services. Wouldn't that affect our margins in the short term? I mean, of course, it's going to be a great data bank which we have, but how are you seeing the margins with acquisition of new customers?
See, in fact, on the contrary, it will have a positive impact on the margin. I tell you, the way currently the lounges are sponsored by clients called banks, we are expecting these all services which are contemporary services to be sponsored by enterprises. So, for example, if you are a large, say, tech company where there is a large, huge employee base, what if I were to give my consumers in the form of reward and recognition all these services? This could be just one of the reasons. I mean, what if I were to onboard the employees and give them a Dreamfolks card, and which ensures that all these services are actually consumed or used by the newly joined employees. So this could be one. And there could be other channel partner incentives, or for that matter, there could be a consumer value proposition for some other enterprise. So these are all targeted towards this, and we are expecting that these enterprise, in order to drive loyalty for their brand, drive preference for their brand, drive loyalty among all their stakeholders, would use or rather sponsor these services in order to achieve what they want to achieve.
So is that the vision of the management, to get into also this pathology and gifting services, to expand the service bouquet so that these cards will have a larger service offerings? And in future, what is the revenue model which you are looking from airports and from these additional services which you are offering?
Okay. So yes, health services is just one part of it. Gifting solution is other part of it, because as we go and increase or accrue a lot of clients other than the bank, a lot of other clients would probably want very contemporary services which currently banks may not be adopting. So we want to be in that race, and we want to be well ahead in the race, and that is why we are going and keeping ourselves abreast of what is happening. So we are acquiring and aggregating all the services which the consumers of tomorrow are going to like, or for that matter, some of the enterprises currently are going to like these services. To answer your second question, Liberta has already guided. All these services would contribute close to 20% of our revenue in the next 4 to 5 years. So we definitely expect both. It could be mix of, which are existing clients, which are banks, as well as, enterprises. Both put together would probably consume 20% of these services. Additional, the newly launched services. That's the expectation.
Okay. So just understanding a B2B concept, this is a follow-up of the same thing. If you can allow me.
So we
sure.
Okay, go ahead.
Yeah. So just to understand the B2B concept of offering your cards. So let's say if we are giving this to a Cognizant, they will have this card available for all its employees depending on the grade, of course, and they will be able to. So it will be similar to we'll be tapping a completely different a new segment for all these things. Is that what the company is planning?
Yes, and you know what, I think, we already did that. There is nothing that we have actually started new. It is just that we are accelerating this. We were always there. We always had a client, in fact, in our presentations, if you were to go, even for that matter, last year presentations, there were always enterprises as a part of our, client base. It is just that we are accelerating, seeing, the kind of, the potential that these enterprises tomorrow will have. We now feel that yes, there is, we need to really push the button and push it little harder. We are not changing anything. We are just pushing it and pushing it harder.
Thank you. The next question is from the line of Nitin Gandhi from Quest Financial. Please go ahead.
Yeah, thanks for taking my question. Can you share some thoughts or risk which you perceive as a cannibalization due to your launch B2C product of direct cards, which will be pursued by your existing B2B plans?
In fact, it is the other way around.
So just to clarify, we are not really going for a direct B2C, right? Because if you notice, we are not doing any spends. We are not tracking typical metrics like customer acquisition, what is the lifetime value. We are not going in that direction at all. All we've done is that we've launched 4 price points at which a bundle of services is available. This is used more as a marketing tool or a starting point for conversations with our enterprise customers. So this is really the thought process of launching it. So Sandeep already kind of mentioned it, but the idea is that we are not really going after the B2C market. This is purely additional tool by which it will help us bundle and sell services. So today we sell services in an unbundled form, and now we are bundling it, and that becomes the option that we are showing to our clients. So that is all we are doing.
No, I get that point, but will you not be going for website login, portal-based selling to direct whoever logs in and...
If somebody wants to come and buy, of course, you can do that. But that is not really our focus. Today you can go and buy this. You can try it on a website.
Yeah, so that's what I'm saying. It's a partly B2C digital sale, but if it picks up, then will not be the corporate enterprise will be pursuing it because
what?
Yeah, it's you are approaching the same database which you have on your cards and other things, right? You are not going to get.
So actually, if you look at the packages, the way we have built in, okay, it is not just the travel related, but it is travel and lifestyle. And most of the benefits which are also not part of the card benefit, which is the credit card benefit. The reason of doing, and the way Sandeep and Bala were trying to explain is that we are not trying to get into that segment. The reason of getting this membership is primarily to enter into the enterprise segment, because we see and we understood that yes, there is a demand where the enterprises would want to give it as a loyalty to their consumers or to their employees. And it is not focusing on just the airport lounges. The focus is more on the lifestyle services as well. So this is where it is. Secondly, the way we are also talking about the way the banks have started, restructuring on the benefit, which is now instead of giving a blanket offer, now they have started doing a spend base. So it is but very obvious that not everyone would get a lounge benefit today the way it has been there. But however, if someone who is used to it and would still want to have the right package, can also go for it. As a company, the model we would want to keep it the same. We would be a B2B company only, because we do not want to enter the segment of B2C where we will have to spend on the marketing or the customer acquisition. We would not want to actually get into that model. The model is very clear that we would still stick to a B2B. However, any customer would want to still take a membership directly through Dreamfolks, they can go on our website and get it done. Secondly, in terms of the pricing, we have very clearly structured our pricing that we would want to maintain and we would ensure or see that our pricing would never be competitive with our banking clients or any other clients in that.
Thank you. Ladies and gentlemen, we will take that as a last question. I would now like to hand the conference over to Ms. Liberata Kalat for closing comments. Over to you, ma'am.
Thank you for joining us today. We hope all your queries have been answered today. If you have any more questions, please do not hesitate to contact us or our investor relationship team at EY. Have a wonderful day and see you all again in the next quarter. Thank you.
Thank you. On behalf of Dreamfolks Services Ltd, that concludes this conference. Thank you all for joining us. You may now disconnect your lines.